Andrew Holland is here with us along with Kunal and Nooresh. Andrew, before we come to markets, what are you watching out for the match? Australia versus India. Is it the bowling, the batting, or this time even fielding will be very important? So, what's something which you are very looking forward to?
I suppose, if we've seen the last few matches, it's been, an exciting kind of finish. And I think, I'd like it to be a kind of a tight game, so it becomes more exciting rather than, it's just a one-sided event. So, but I think the batting is obviously going to be the key. We're all be rooting obviously for India in the final. So, I just hope it's not too one-sided for India, and it's a good game.
The way financials are taking it, let's come back to markets. So would you be a buyer of some of these, stocks which have been taking it on the chin today? L&T, RBL, some other PSU banks as well.
It's been interesting. We've kind of been scratching our heads right over the past few months about the whole financial sector, and particularly the banks. Stellar results. Yes, not great commentary about NIMs, but there was something that was just holding the sector back. And maybe now with what the RBI has done, we know what, the concerns were. I think to my mind, I think it's kind of fairly well priced in, given the underperformance. So I think once we're through this, and I think, throughout the day, I'm sure you've identified the winners and mainly the losers from this move. But thereafter, I think, if the narrative changes more towards, which it is doing, towards lower interest rates, commodity prices helping, then I think we'll see the banks recover and be one of the leading sectors going forward towards the back end of the year, actually.
On that subject, let's hear out Dinesh Kumar Khara. He just had an interaction with Ajay. Of course, about the RBI norms, B, about the fundraising, etc., and how SBI card gets impacted because of this norm. Let's hear out his views.
I would say that perhaps it's a step in the right direction, considering the fact that there was a lot of concerns which were expressed by Honorable Governor relating to the kind of unsecured credit which was growing, and also the players who were extending that credit. So that is one of the reasons why perhaps this kind of measure was very much required. And I think we in the financial system, we were expecting something on the similar lines to really happen. So I would say that it is not merely the unsecured credit being extended by the banks and NBFCs, but also the NBFCs which borrow from the banking system. There is a recalibration of the risk weights, which has been directed by the Bank of India. So, which very clearly means that the capital allocation for supporting this kind of a asset class would actually go up. So, if I take the example of State Bank of India, we have done some back of envelope calculation, and we expect that our capital requirement will perhaps go up by about 55 to 60 basis point. Point is that the major demand drivers are essentially those which are like home loans, education loan, gold loan. So these are the entities, and even MFIs also. So these are the entities which have been kept out of it. So I expect that these are the major entities which are into asset creation, and also it is also a chunky demand for these kind of loans. So I think to that extent, there would be some impact, but not as significant, which should be a cause of worry. I would say that in many respects, it will probably avoid any kind of a liberal spending, which perhaps people would have taken, where people could have challenged in terms of repayment. So I would say that it will ensure the healthier growth of the demand and also of the economy too. Even if we reckon the impact of this higher risk weight rates, I expect that it will consume about little more than 400 basis point for the kind of book which they are having. So it would still be about 17% plus in terms of the capital adequacy ratio, which will be much more than what the regulatory prescription is. So there also we are quite open in terms of raising the resources through tier 1 or tier 2. So the board will be taking appropriate calls, and we don't envisage any kind of a challenge even for the SBI card. And as far as the quality of the book is concerned, adequate steps have been taken by the company to address the quality related concerns and to ensure that the book stays insulated from any shocks as far as the credit quality is concerned.
Okay, some other big movers in the trade include names like Nika, which is suddenly up 9%. You also have Narayana Healthcare, which is up 6-7%. You also have names like Titagarh Wagons, which is now up around 12%. But the other pocket, which is actually doing quite well, is the entire insurance space. Take a look at SBI Life, higher by 4%. ICICI is also up by around 4%. You also have names coming in from ICICI Pru Life also, which is higher. So all of these insurance plays, whether general or life, are all seeing a bit of a bounce. Kunal, comment on the charts of some of these insurance companies. Should one buy the momentum here?
It's a start of a momentum, but it's a start of a breakout for many of these names, Anisha. So I think, for example, SBI Life, we were discussing in the morning on Chartbusters that how the stock has come out of almost like a 3-4 months of consolidation. It's not been a very mild kind of a consolidation for these stocks. The range for SBI Life, for example, has been quite steep. The stock had formed, I think, a 80 point to 100 point range in this last few months of consolidation, and that's why you're seeing the breakout being more powerful over there. HDFC Life also, I think, has confirmed the 50 DMA breakout today, breaking past about that 640 mark. So I believe that's also another stock to look out for. ICICI Pru is something very interesting because that stock is now completing or on the verge of completing a bullish flag formation on the daily charts. So is the case with ICICI Lombard. In fact, even the PSU names and the stocks like GICRE, National New India Assurance, I think these are the ones which are also looking very attractive on the charts. Many of these stocks have confirmed a swing breakout for themselves. So when we see such kind of a strong cohesive move across many stocks within the same sector, and that too especially at a time when many of the stocks are coming out of their major consolidations, we term that as a breakout and possibly a strong sector trend which could be in the making over the near term.
Nooresh, wanted to get you in on some of the beaten now names. I mean, look at SBI. Ajay was just highlighting as to how it's retesting the morning lows. In fact, that can be said about the entire private banking pack, or rather large cap banking pack, Axis, ICICI Bank, and I would throw in a Bajaj Finance amidst the NBFCs as well over here. Tell me what you read. Do you think there's going to be any recovery anytime soon, especially on the charts of an SBI, Axis and Bajaj Finance?
So if you look at price action, anyways, the recovery was relatively feeble compared to the rest of the market, whether it is the broader market or the Nifty. And after today's announcement, a gap down with decent volumes makes it difficult for a recovery. So we could get into a sideways zone for a lot of these names. If you look at State Bank of India, it has always struggled to cross that 580 to 600 mark over the last 6 months. On the downside, 550 is a support. So one can be looking at a buy on dips closer to 550, not as of now. Same way, if we go to Bajaj Finance, the stock has struggled around that 7,800 to 8,000 mark. Closer to 6,800, 7,000 is the support. So that is a point where you want to look out for a trade, for a bounce back. ICICI Bank has been the weakest of the lot in terms of from being an outperformer to something which has gone sideways, and now today's downtick. But again, there is a lot of support at 880, 900. So as of now, one would be better off waiting for some more downticks to start participating, not on the first dip as such. And overall, there is a good possibility we go sideways. So one has to be playing for a bounce, then the risk reward has to be better. So maybe another 2-3% lower is one could start looking at these names.
Right, okay. That's the take coming in on the entire financial pack. Let's also, focus in on what's actually holding out. Besides, of course, the insurance plays, some of the auto names are chugging along very nicely all through this week. In fact, we should bring up the Nifty Auto Index this week chart alone, because that's one sector along with IT which has really staged a decent comeback. That, of course, is today's move. But if we bring out the weekly chart, there you go. A 4% move is what you've seen on the Nifty Auto Index. Today, too, there's a Hero MotoCorp, there's of course TVS Motors. They're all holding out very nicely along with a Bajaj Auto too. Andrew, where within autos are you comfortable adding fresh positions?
So I think there's been across the board actually in terms of you can whether it's On the two-wheeler side, there's been a lot of reports or negativity around Aisha in terms of the competition, and that hasn't played out, and we've seen a good run in that stock. We've seen some news from TVS recently, which is again positive. So I think it's more stock specific rather than the whole sector. But of course, you're getting all the other kind of companies being benefited from some of the positivity around the sector. But I'd also say that when you're trying to find sectors within the Nifty, and I'm talking about that in particular, if your banking sector's under pressure, then you have to put money somewhere. So at least with the auto sector, that the festival season's been good, and the outlook remains, itself, kind of robust, and therefore you have to look at which of those either two-wheelers or four-wheelers are going to do well with the fact that they've got new products or new cars coming out or new bikes, and the kind of margin pressure, which they've been seeing, is that being alleviated. And obviously with commodity prices coming down, that's another tailwind for the sector. So overall, it's a good sector to be in the short term. I still think the banking sector is the one what you're going to have to make money from if the market's going to go up further from here.
Right, okay. And just stay with us. Lots more to chat about. For now, we're going to take a break. It's an absolutely flat day, but we're clinging on to 19,800 at least for the futures.
Andrew, have you looked at the power financier space closely, REC, PFC and the likes, and the way they've kind of doubled in their book values in the last 6 to 8 months? In fact, one of their peer groups, though not the legacy power, but renewable power financier, IREDA, IPO, which is getting lined up, is also witnessing good response. Do you like this space?
Yeah, I mean, we've been dipping our toes into this space. I must admit, in the past month or so, on the basis that I think for some of these companies now, they're moving into renewable financing as well, and I think the market likes that part of the story. One of the companies doesn't speak as much as the other in terms of what they're trying to do. But what we're hearing is that some of the problem loans again are going away. So you're getting a stronger balance sheet. The government's obviously this is a huge sector for them, which they want to get right. And the cash flows and the payments to these companies is fine. So I think everyone's kind of shifting a little bit away towards this type of kind of financing companies and just away from NBFCs in the short term. So I think there's a lot more to go because I think it's a sector, it's renewables we talked about before in terms of it's something that the government, and not just our government, but globally, is going to be a sector which is going to see a lot of investment. So the likes of RECs and so forth will continue to do well and gain market share.
Okay. Also, Andrew, the IPO market has been quite a flush, right, of late. I mean, since you were talking about IFC, about PFC, REC, you have to talk about IREDA IPO as well, right? Indian Renewable Energy Development Agency. I don't know if you've taken a look, or any of the other IPOs which have been hitting the primary markets of late.
No, we have participated in a number of the IPOs over the past 3 to 4 months, but again, being very selective. I mean, there's 4 coming out next week. I'm not sure we'll be going for all of them, but I think Tata is obviously looking something that's going to be interesting. That will we've met the management, they like the story. So these are kind of companies that we think will do very well. Not just in the very short term, but longer term as well. And then there's a whole bunch of other companies I'm seeing their prospectuses coming out. So I think the next few 2 to 3 weeks is going to be a lot of IPOs. What I have noticed though is that what is interesting is that the premiums are coming down a little bit, even though they're hugely oversubscribed, which I don't think is a bad thing either. We're not just playing for hype, you're playing for the actual fundamental story.
Okay, point taken. In fact, we did speak with the management of IREDA, listen into what they have to say about the sector and the company's prospects.
When we talk about having 500 gigawatt installed capacity, which is roughly require an additional capacity addition of 300 to 320 gigawatt, in addition to 30 gigawatt of thermal, which require for our base load kind of requirement. So fair amount of investment is going to happen in the renewable space. We have a rough projection or estimate of renewable investment in the country till 2030 around 30 lakh crores. And if you go by a rough estimate of debt equity 75 to 25, then around 24 lakhs crores will be required for additional capacity. And out of that 24 lakh crore, typically 50% is expected to be supported by the NBFCs. When I talk about NBFC, the major player would be IREDA and other two major arm of Power Ministry, that is REC and PFC.
Okay, point taken. Since we've talked about PSUs and the power financiers, Andrew, a word on the railway stocks. They seem to have gone out of flavor at least in the last few weeks, but today again they're perking up, whether it's a Titagar, whether it's a Railtel, whether it's a RITES, IRFC, etc. All of them are higher, and even Railway Vikas Nigam at all. After the run-up and a bit of a pause, do you think it's time again to dip into these names?
I must admit, I'm not an expert on those kind of railway stocks, but the way I've been looking at this this whole kind of industry is through some of the players like the Siemens of this world, because again they have an ABB's so apart from playing that infrastructure play with those two companies, you also get the railways in there as well. So that's the way we've been looking at it.
There's also, TVS Motors, which is running in trade right now. But Andrew, if you look at TVS Motors embedded value of assets which are inside, their EV business, which is already clocking numbers close to 2/3 of Ola Electric. Ola Electric, which is heading for IPO 2-3 months, if you read the papers, is being valued at around $5 billion. And the entire company legacy and EV business in TVS Motors, which is a close peer, is way less than that. Do you see value unlocking possibility by the time Ola Electric IPO hits the street at TVS?
It's a great analysis, and yes, I'm sure that's what the market will be looking at if you're valuing something, and that's the whole story around a lot of these companies, right? We're seeing that whether it's globally, valuations are higher, or the expectation is that those valuations could be kind of placed upon some of the kind of subsidiaries or other companies within the group. This is really kind of move prices in the kind of shorter term as well. So yeah, I would have thought everyone's going to look at those valuations and say we should apply the same. And why shouldn't you? Unless there's something different about the way the company's operating their business, which I don't think is the case. So I think you will get, maybe not all of it, but I think you'll get some of it play through in that revaluation of the business that the market's been ignoring, shall we say, until you get a new listing. So it's a good analysis by you.
Right, okay, that's the take coming in on TVS Motors. What an excellent performance. 60.5% no less is the kind of move that you're seeing on the stock all through this year. Kunal, since you also track some of the auto names closely and have been holding some of them as well, where are you confident of adding fresh positions, if at all, at this juncture?
So I think, of course, Tata Motors is something which we've been discussing consistently. That's a stock which I would still believe is good to add at current levels of I think 670, 680, where the stock is trading right now. So it looks attractive. The recent breakout is also indicative of a 4-month, 5-month consolidation breakout from the June-July highs for Tata Motors. You've been discussing Maruti, and specifically from the point where the stock had broken past about the 10,000 levels. That's a classical kind of a breakout indication for Maruti. The stock from the 10,000 mark has not gone into any kind of a major correction. It's not yet broken the 10,000 levels in terms of supports. So which means that the trends have started off on the upside for Maruti. and the 10,000 mark approximately could act as a major support or a base for the stock over the near to medium term. Now, from a fresh breakout point of view, Hero MotoCorp is something which looks attractive. I think after the last 3 days of strong up move, the stock breaking past about 3,300 mark yesterday, I think coming closer to the 3,400 levels today, I think it's indicative of a fresh flat pattern breakout for Hero MotoCorp. So maybe another upside of 200 to 50 points broadly over the next couple of weeks is what we can look out for.
Okay, so that's a take on some of these automobile players as well. Separately, Nika, that stock is high around 9%. And Andrew, if you have looked at Nika as well, we have seen the kind of turnaround as far as Zomato is concerned. Other names like Paytm, etc., had also kind of made that bottom earlier and moved ahead from there. But Nika was languishing. Do you believe it's time now to look at this one as well?
Yeah, I know. I think it is. I think we've seen the kind of strong share price rises of Zomato and Paytm as they move towards that kind of break even or profitability. Paytm might be suffering a little bit today because of what's happened with the RBI. So therefore, the other stock you would look at then, if your expectations are the profitability is going to be there soon, there's going to be the other kind of company, which is Nika. So I think that's what the market's looking at and getting excited about. And it's been, as you could have, all those three stocks have been doing nothing for a little bit as the market was just waiting confirmation that things are moving on track. And I think once that confirmation was there, we've seen all stocks, all these three stocks move up quite significantly.
Yeah, Andrew, great to have you on the show, and we'll chat again soon. We'll have a World Cup winner as well then. And yeah, here's hoping it's a good match too. But let's take some closing strategies as well. Nooresh, what's on your list?
So continue like Dr. Reddy's, the stock has seen good follow-up today from yesterday's momentum. Looks like a stock which would go towards that 6,000 mark. So a buy at current levels as well.
Right. Kunal, what about your trades?
So I'll go with insurance stocks. SBI Life is something which looks attractive at 1,400 odd levels. Looks to be a bet for at least another 70 to 80 points on the upside.
Let's take a very quick break. Then on that note, when we come back, we'll track the last half an hour of trade this week.